Welcome to TradeTheMBI.com. This is John. This report is for the 27th of April. And well, there you're reading it from the start of the year to where we are, minus 12%. This was not surprising. We saw that there was potential for that little bit of pullback strength with the magenta rising, but it became easy because we had the 38% as a number that you had to get above, and when it was unable to do that, and it happened early on, the slide started, and it was a little back and forth at the 23, but then it just started to cascade lower, and we all know the economics behind it. Pretty clean here from a NASDAQ standpoint. It was much weaker. That break back down right below the MBI, white leading, and then the magenta MBI dips below. Just a complete cascade with the DOC as well, having gotten up to the 13 and just rolled back over immediately, even on the up day. And again, that was an easy one as well because we had that 23 from the close, even though it began to dip. That was still the number right there, was at 13,491, and broke below that and just kept going, filled the zero with the white leading. No surprises with any of that. Where it's starting to get interesting here is, I've been talking about the cascade lower for the euro, but and I mentioned at the beginning of the week about the yen situation and asking for coordination with the U.S. to support the yen, and when they rejected it, it was going to be an indication that the U.S. was looking for investors in U.S. treasuries, which is exactly what happened as the yen started to fade as well. But the euro, who wants ECB bonds? Nobody wants anything to do with euro bonds and that. So that cascade guarantee, we've been talking about the bankruptcy of the ECB for some time. It was just a question of how long. And it just appears the Fed can't really afford to do anything. They really are looking for capital flight from other locations to help assist in that yield curve problem that they've got with treasuries. And you're going to throw other people under the bus. So 106 now, 3, and falling. Gold holding on, despite the market meltdown. In this case, most of that had already been used up as far as effectiveness. We kind of came back and sort of filled all those positive extremes that took place from earlier. We had that one that was right back here, and literally didn't even get to the bottom tail of it, but filled enough of it that that's been taken care of, but still in a weak slide, relatively speaking, given what we're seeing from inflation not letting up. But if some of those numbers continue to cascade, we saw weak home sales, things like that, that compounds fast and it goes quickly, and all those expectations they had of strength and stuff start to fade really quickly, to a point that they just don't have control over it, and but there's not really much else they can do. I mean, it's self-inflicted with all of the supply disruptions, and then of course adding in the sanctions with Russia, and that this is the price. Oil still over 100, and as long as it remains, elevated at that area, any supply shock situation where, of course the EU was talking about being completely done with Russian oil by 2027 now, and backed off a little bit so far. We haven't heard any talk yet of the banning of Russian oil completely, but Russia did announce that they were suspending oil to Poland if they don't pay in rubles. That's an interesting one because that could compound, because next, if it's not rubles, they're going to have to settle in metal. And this is what it's done for treasuries. So, that cascading lower of the other currencies, forcing a capital flight, and that's always going to be to the safety of the reserve currency of the U.S. Treasury, and that's helped alleviate some of that rising yield. Bitcoin and that, it had a little nice rally that started up there and then started MBI, magenta, staying below. The yellow here, but in this case was back and forth above and below the 33%, and then when it finally broke down one, it took out the previous low that was pretty good, and then by the time it hit 25, it was pretty safe to say at that particular point you could be comfortable at that time. So DOC green fading below, so it was, still had a couple of bars before that ultimate breakdown. So again, that became that same range that we was talking about before, that 40 to the 39. But once we get to the 39 and it broke through back down to the lows, it poses a real interesting question, because now, unless you're able to fight back up to that 39, and this is not looking like it's going to do it, you do have the advantage of orange dipping here, but it pivoted back up with orange on that one intraday, and we could see some continuation weakness on that. And then you start talking about, the 34,000 range, and then we get down into the, 28s stuff. So ETH darn clean, just really nice, and it just followed that all the way through until the end of the day there. Finally, magenta moved above white, giving a nice little positive. It's not really holding up very well, but hasn't collapsed under that, showing some weakness right now, and that could be enough to start driving it back down. Expect to see it pivot back up of white here to really drive that. So the catalyst for all the things that the market has been warning about coming true, especially when they do those bear rally moves that are dramatic and catch everyone off guard. From a 50K standpoint, that sell came in and boom, it's stayed pretty much red throughout that range there. And from a 5K standpoint, so it started early on. We ended up with the elevation before, then we faded down, caught back up again, but then white poked its head up right as the magenta dipped down below, and then you started to see a rollover in there, even if you waited to the next bar. That was just the beginning of it. And we had the positive extreme here was 42.55, and that was from 65, right back over here. Little positive extreme setups that took place right at the beginning of the rally. It's got a yellow marker a little bit lower down the 57 range, but clearly the red one starting right there, and I had marked that, put that chart up early in the morning, and then once it started, it was just nothing to do with that. It just kept going, and again, another solid sized day. Got a little bit of a pushback up, but again, putting in additional sell signals with MBI white leading, and that drove back to the zeros, and then we just kind of traded sideways until ended up with a series of these white peaks. And when those start to happen in a series like that, you've got inherent weakness built in, so it's just a matter of waiting for the appropriate crossover signal, and boom, you can attack that one, and it did not disappoint. As you can see, beautiful sell all the way through to the close. And then in the open market there, now you've got the post-trade kind of clear out any short stops or whatever that have been lingering, and see if they can capture a little bit in between. But that was quite a significant move at this 4100 level. Still not horrible. I mean, yes, from the highs to where we are from today, but overall, we're still in an area where we're way elevated, by all metrics. So there's plenty of room potentially to the downside. It's just a question of what we start to see from those economic numbers and how significant an impact they are. So obviously we keep an eye on them, and that's why we pay attention to them, because we can see all this stuff starting to build quite some time ago. People kept saying, oh, you can't rely on the bond, inversion. That's not going to play out this time. And every time that it does that, they say the same thing, and it always creates the same situation and always leads to a recession. So take that for what it's worth. So you can begin to watch all of those other numbers start to compile and get in line with it. And it's not a rosy picture. It doesn't mean there still aren't going to be buy returns within the setups, but you just got to be aware that there's broader forces at play that at a certain point start to have meaningful impact. As always, though, I will continue to update you on the Skype chat as we prepare for May's action. This has been an excellent last half of the month. No question about it. Lots of excitement with it. Trade well. You can look for me on Skype chat. Talk in later.